Trade-based money laundering is now a global threat. So, trade-based money laundering is very important to discuss. Let's have some slides to say overall situation of the growing menace of trade-based money laundering. The growing menace of trade-based money laundering and remedies is the today's topics. So we shall discuss about the scopes, remedies, and some cases should be exemplified during our discussion. Growing trends of trade-based money laundering in summary: geopolitical instability, trade frauds, lacks of regulations, cryptocurrencies and regulatory oversight, irregular trade transactions, country corruption and dual residency, tax havens, hundi, hawala, war and illegal trades, wildlife violation, child and sexual abuse, human trafficking, illegal arms and drug trafficking, hostage, human hostages and ransom, etc. So, in summary, what we have seen here, these are a broad phenomenon globally, and all these have thousands of impacts over global laws and regulations and also global trade transactions. Let's see the TBML scopes. How TBML occurs. We know that there are few methods for trade payments. Those are advance payment, that is also called cash in advance, open account, documentary collection, documentary credit or letter of credit, and currently bank payment obligation is another tools for trade payments. And through all these methods, trade-based money laundering occurs. No single payment method is replace or not flawless. All these tools have the opportunities for the trade-based money laundering to impact trade with money laundering if some cautions are not taken. So what are the TBML transaction types? Let's know. Over and under invoicing, very common phenomenon, and through this method the huge volume of trade-based money laundering is happened. Use of shell and shelf companies, multiple invoicing, unique ownership, import-export transaction, ghost or fictitious trade transaction, excessive use of cash, hundi or hawala, transaction of free trade zones, border trades, landlocked countries and tax havens, complex and subtle transactions, dual use of goods. All these are types and typologies. Major red flags regarding goods. Dual use goods, especially army and commercial or industrial use. Those goods lies threat on trade-based money laundering. Goods having wide range of margin. Goods having extended trade cycle journey, multiple jurisdictions. Goods price of which difficult to determine by customs authority. Goods, those are highly promoted with cash incentives, capital machineries, especially the reconditioned machineries, where price cannot be determined, gold, jewels, other precious metals, and real estate. Major red flags related to importers or imports. When imports are done, transition is not sometimes in line with the buyer's trade transaction profile. Suppliers' line of business is sometimes unknown. Suppliers' credit report sometimes obtained but having a very poor rating or ambiguity in credit rating reports. Inadequate system of tracking vessels, verifying prices, or sanction jurisdictions. Importer is keen to wipe discrepancies and make payment immediately. Importer is no or less concerned about charges and commissions. Supplier is located in tax havens or in landlocked countries. These are not merely talks. All these titles have huge dimensions and we need more studies. Let's see what are the red flags related to major red flags regarding exports. Major red flags regarding exports are inadequate assessment of trade customers, both seller or buyer. Seller and buyers are of same individual or beneficial owner. For an example, a seller is selling ready-made garments to Dubai, where the buyer is his own company or of his own ownership another company who is dealing business in Dubai. Buyer even don't have existence of shell company, inadequate systems to track vessel, very low prices, and sanction jurisdiction, short shipment noted despite of full shipment or less fund realized, and this is very much dangerous symptom because frequency of such transaction is a huge amount of siphoning of the fund. Goods exported but proceed not realized. Exports are excessive comparing to country production but not checked. As an example, betel nuts. Nuts are produced limited in Bangladesh, but to export are exported a huge quantity of nuts to some countries, such as Thailand or other countries, in a year that is multiple times more than the production of the country. This is red flag. Vessel, container, all these have international sanctions, US sanctions or UN sanctions. It should be tracked properly. Hawala Hundi are one of the most dangerous tools for TBML and very difficult to trace because its layer is multiple. It uses banks, it uses MVTS, money changers, courier services, and some shippings. So finally, it may be eked out through banks. So Hawala and Hundi is huge threat to TBML process. Jurisdictions. High-risk jurisdictions like Libya, Mali, Niger, Iraq, Afghanistan, Cameroon, all and much more. There are some islands also should be kept in mind while dealing with transactions in high-risk jurisdictions because money launderers prefer to conduct transaction in these jurisdictions. Thereafter, landlocked countries. Landlocked countries are also risk because in landlocked countries, direct shipping cannot be happened. Sometimes multimodal shipping goes, so there might be chances to have money laundering by documentary fraud and shipment frauds. What are the TBML challenges and what are the key challenges? The key challenges of TBML are price verification, transfer pricing, limited skill manpower, extreme business competition in banks, lack of coordination, and duty and tax structure. For some specific fields, banks have improved, but in some trends, bank could not still globally be equipped, such as lack of skill manpower or limited skill manpower to and handle all those. For duty structure, it is very much difficult for the bankers and as well as for the customs officer also to know all the tax infrastructure or structure globally. So these are the problem of TBML and TBML promoters. What are the promoters of TBML? Let's see, secrecy jurisdictions, then gap in financial regulations, tax havens, fake foundation, anonymous and numbered accounts, and disguised companies. Among those, we have already discussed about the tax havens. Secrecy jurisdictions are some islands, and fake foundations are most important. It is in the name of some foundations. Globally, these are increasing day by day, and money launderers are hiding their illegal, ill-gotten money in these foundations or NGOs. Anonymous and numbered accounts are also threats, and disguised companies, shell companies, and shell companies are very much dangerous for trade-based money laundering. So, risk-based approach are nowadays applied to the banks, and many international and local banks have taken their risk-based approach in office so that they can mitigate trade-based money laundering. So first of all, in infrastructure level, banks should establish rules and guidelines, clear authority chain, technology and screening, escalation, etc. At customer level, KYC, TKYC, CDD, legal documents, jurisdictions, production services, transitional parties, transitional review, trade TP updates, etc. At transitional level, so there should be a three level transactions: screening, TBML components, and escalation. Level 2, a review, disposition, and escalation guidance. And at level 3, comprehensive review, approve, and rejections file, SCR or STR filing. And then enterprise level, institutions wide assessment framework, policy and strategy review subject to assessment, escalation, case study assessment, typology analysis, and new typology dimensions, ensure risk assessment tools available, training, awareness, and related actions should be employed properly. Then, what are the recommendations for protection of trade-based money laundering or prevention? So, public-private partnership are very much important. Only banks cannot compete with the trade-based money laundering threats. Regulators also can not singly do it, but public-private partnership can minimize it. Engage actors and regulators in same platform, task force of different groups to monitor properly. Then holistic approach should be taken, just like raise massive awareness programs, strict regulations and punishments, holistic approach and other measures, guessing the trade-based money laundering. Strategies to combat: national and international cooperation, comprehensive mitigation plan, realistic approach. Then improve policy responses, specifically strong global actions against corruption, current regulations, gap address and actions taken, strengthen international cooperation to upgrade and update laws, regulations, and zero tolerance. Finally, innovative research and data method should be improved. Improve data, trade data, make it available, and national and international coordination in data management, enhance fastest response to TBML cases and actions, data exchanges, develop human skills and improve tech capacities, further develop monitoring system and analytical tools, and make data in corporations among the transacting parties, TBML based comprehensive research on all these, and make new typologies available, screening. So this might be the recommendation for strong TBML prevention courses. So another key components, if we summarize, we can find that fraud monitoring, watch list screening, sanction monitoring, identity verification, due diligence, customer or enhance both, and transactions monitoring daily and regularly without fail will help trade-based money laundering to keep itself in a very minimized rate.
Thank you so much, friends, for viewing my channel. And I wish I will be with you with such important topics in future. Thank you.